Welcome to the Voice of MPE, the official podcast of Merchant Payments Ecosystem, Europe's largest merchant payments conference. Today, we are at the 16th Annual MPE Conference, MPE 2023. This podcast brings you interviews with payment industry leaders and professionals from the entire payment world. For more information, head over to www.merchantpaymentsecosystem.com. Today we are talking about the digital identity and payments ecosystem. Rogier Rupe van der Voort from PCN, the moderator of this session, spoke with Galit Shani Michel from Forta, Andy Grant from Spreedly, Karen Aviasaf Migdal from Works Payments, Rajit Hibul from HelloFresh, and Reinhard Höll from McKinsey & Company. In today's podcast, we'll discuss the verifiable credentials, digital identity, and personalized service implications for the merchant payments ecosystem and how merchants can leverage digital identity to personalize the payment process to ensure every consumer gets the desired experience.
So I'm pleased to introduce you to the rest of the panel. First of all, after Galit, Andy Grant, who's a senior solutions engineer at Spreedly. Then Rajat Hubli, who's the Senior Director of Product and Analytics at HelloFresh. And then Kiran Afiasaf, who's the co-founder and CEO of Works Payments. And last but not least, Reinhard Höll, who's the partner at McKinsey. Welcome, everyone. I'll always start with a round of introductions. I'll introduce myself, by the way. I realize I haven't done that. My name is Rogier. I'm the CEO of PCN, and we are a headhunting agency specialized in the payments and fintech space across Europe and the US. I'm pleased to be joined. Shani, we had a little bit of a presentation of you, obviously. Would you mind doing a bit of a more elaborate introduction to the audience?
So I'm Galit. I'm VP Payment at Fortair. I started many years ago as head of fraud, where we still had a lot of rule system, and every day I was waking up trying to find the right pattern and to block it, so my team will have a better time reviewing the right rules. And then I managed payment for many years, and today with Fortair, we really focus on the whole experience and conversion and trust, how to make sure that you know who to trust and they get the best experience.
Awesome. Andy?
Yeah, thanks. Andy Grant, working at Spreedly. Got 15 years in payments, whether at MasterCard or Elavon or various PayFacs. It's probably ironic that it's such an international panel and we're in Berlin speaking in English, but I'm probably the one that needs subtitles for, so apologies if I speak too fast.
Rajat.
Yeah. Hi, this is Rajat here. I lead the global payments team at HelloFresh with different functions like product, analytics, and the business. Also started working in payments back in about 10 years ago. Started on the engineering side, then actually was leading the product teams, and now really bringing all the functions of payments together.
Hello, everyone. I'm Karen Aviasaf. I'm a well-rounded expert in payment processing and risk management for the past 20 years, if I'm counting. I'm also had several executive positions within global merchants and acquirers. And in the past 10 years, I'm a fintech entrepreneur, and I had several ventures. Nowadays at Works as the co-founder and CEO. At Works, we automate all the knowledge that SMBs do not own in order to help them to maximize their revenues and performance and mitigate the risk levels, everything based on AI and predictive modeling. Thank you.
Reinhard?
Yes, and good morning. Reinhard Höll, partner at McKinsey. I lead our digital payments practice in Europe and have been doing and convening our digital identity activities as well, anything from specialists up to governments, and very much looking forward to this.
Great. Likewise. I think we have quite some seniority on the panel itself in payments, which is great. Also from different perspective, which is good. Maybe Rajat, to start with you, because you come from the merchant side, which is super interesting. If you look at the presentation that Galit gave, how do you at HelloFresh use that digital identity today within the checkout? Is it something that you're using, and how?
Yeah, I think just for context also, right? So at HelloFresh, it's like super important for us to really look at the entire customer, let's say, digital identity. We don't only have, let's say, payment fraud kind of like topics where we use digital identity, but also more around like voucher abuse, which is a much bigger topic for a company like HelloFresh, where we do a lot of vouchering. So yeah, we do partner with Forter for multiple products there, but we definitely take this full digital identity approach and really partner with Forter there to build that, but at the same time also really continuously review that and then review in the top 4 points that Galit also mentioned about payment methods, personalization, etc. So yeah. Super important. I would definitely say the take away from that would be really don't use rule-based. I think that's probably a very simplified take away from there, actually.
That's because of the knowledge that you have now.
Yeah, I mean, I think like clearly to improve conversions, you really want to kind of reduce the fraud decline rates and basically the false positives. That's the journey you want to take as a merchant. And one of the lower hanging fruits is really to move away from rule-based to more like a digital identity, or really like trying to understand with past data. So that's one of the low-hanging fruits. There's a lot in the journey that you could do, but one of the first steps should be really kind of moving away from rule-based and then trying to get a full picture of the customer.
It seems to be a no-brainer, to be honest, Galit, looking at your presentation. But why is not everyone doing this? Why are not all merchants implementing this?
So I think sometimes the knowledge is not there, and there is some, I don't want to say common practices, but I mean maybe older practices of using rules, and a lot of people just continue to do that. But more than that, I think understanding the real digital identity is very, very complicated. And to be honest, I don't think that a lot of merchants can develop that in-house. There are companies out there that can do it. At Forter, there is a lot of people that all they do is build this knowledge of understanding the ecosystem and what the consumers are doing and how to link between what they are doing and what does it mean, few people using the same IP, and all of this, and how do you really know the identity behind the transaction. This is something that requires heavy development. And another, obviously, the good side of using a vendor is that the vendor knows a lot of identities that are new to you. So maybe it's the first time I'm buying shoes on this website, but I probably bought something else on another website or shoes on another website. So by using a fraud vendor that actually has a very large network of identities, you actually enjoy the fact that Forter or any other vendor already know this person trying to interact with you. You don't have to be scared just because you know that Forter tells you, hey, we trust him. We've been seeing him for 5 years already. Don't worry about him. So I think the big advantage here is to use vendors. And to be honest, I haven't met any merchant that really developed the way to understand digital identity in-house.
Vendor has access to the data that they can obviously learn from, not just on the consumer, I guess, but also from other consumers, that they can identify behaviors that will then be in line with a certain payment method use, for example. How long has it been around for? Kind of digital, I'm sure it's been around for many years, but how long has it been around for being used so significantly by merchants?
So I think a couple of years for sure. I mean, Forter exists about 10 years, but everything is developed. So while the ecosystem is developing and the payment method, like everything is developing with new payment method, new ways of buying. I mean, some years ago, you couldn't make a purchase from your phone. Things were so much simpler in that sense 15 years ago, and I had to manage a fraud team. Everybody was doing everything from the laptop. An IP was something that would never change. A device would never change. So I think as the ecosystem is evolving, everything is becoming more complicated. People are traveling, bike from everywhere. You just have to adapt to that. And if you're not using digital identity, mainly you will miss a lot on providing your good customers the ability to buy from you.
Is there other ways to drive adoption? Reinhard, maybe is there regulation that could drive adoption, you think?
And actually, even linking to the first question which came up here, I think it's very interesting moment we are. I mean, if we look across Europe at the moment, I mean, we're seeing certain countries where there are already digital identity wallets out there. I mean, if you think about Scandinavia, if you think about Finland, Estonia, and even humble Belgium, have very well-established digital wallets which work. And I mean, I love your point about we need to think in terms of identity and trust and not in terms of transaction. So I think one of the questions here is whether this may be able to bridge the gap. So one of the things we have seen, for instance, in Belgium, It's.me is used in many ways as an example also for people to log into merchants. So it doesn't solve everything and definitely does not solve the issue of someone who wants to get all the coupons. But eIDAS by itself, I mean, the initiative by the European Union that every country needs to have some kind of digital identity wallet, I would fully expect, number one, to drive adoption. It will particularly help in the larger countries where for a long list of reasons, which is too much to do, it has been more difficult to just gain scale because of more industry actors involved, and potentially on top of that one also to put some trust into people who say, well, identity is always something I try to avoid as much as possible. So yes, it will help. However, and I would say it's likely going to take a couple of more years to do that because a lot of the regulation at the moment is more focusing on the high trust cases. And what I mean with that one is in particular towards accessing public services, which in many countries is still quite difficult to do securely. Healthcare is a particular issue, financial services, and actually less on the more humble retail store experience. But I'm hoping for disagreement on the last point here.
Is there agreement from everyone on that?
I think we have discussed this like on our call that it's a bit too futuristic for us to really address it. I think maybe for healthcare or government use, digital identity will emerge eventually as a solution. We know for sure that there are some startups that are working in that space, but I'm thinking that, as Galit mentioned, it's very hard to build a digital identity. As a merchant, sometimes you recognize your customers via email or a phone number or a device number, or sometimes you try to group a few parameters together to have kind of identity inside your merchant space. But it's still very hard to take something like that and just to use it across the board for all the merchants. So I'm not very positive this will create high adoption, for commerce, at least.
So it's more driven by consumers, maybe, the adoption. Consumers and then obviously providers and the merchants who actually need to want it. But I guess that's what it's driven by.
Yeah, I also think that talking about regulation, and we all saw the impact that PSD2 had, like the intention was good, the results were really bad, and it takes very, very long for the ecosystem to adapt to new things. And at the end of the day, from PSD2, and we saw it especially on the first year, but we are still seeing it, the merchant suffered and the consumer suffered. So there is a regulation which is aimed to be good, but first of all, I can tell you at Forte, even merchant that implemented 3DS on 100% of the transaction, they thought, wow, now I don't have to do any fraud checks because I don't have the liability. So actually everything went back to like 15, 16 years ago when merchant didn't understand they have to actually manage fraud. And a lot of the fraud can pass 3DS. Understand, like getting the SMS, it's not that hard, and fraudsters know how to do it. A lot of the frictionless 3DS can work when you are a fraudster. 3DS is not a reason not to check fraud. For example, this regulation is something that by a mistake, that was, it drove. And at the same time, then there was the exemption and some issuers didn't comply with it and didn't want to agree to it. And now you have to start to understand what everybody wants. And then you have my mom at the end that she's trying to buy something and she can't. So I think that we need to be very careful with this regulation on like how to implement them, because a lot of time the intention is correct, but then you see 2 years of chaos until it's actually working properly.
I think the danger of legislation like PSD2 is it very often feels like it's expected to be a one-size-fits-all for every citizen everywhere. And, like PSD2, as a consumer, I want to get the maximum protection and I also want to get the maximum convenience. So PSD2, you get tired of, am I always getting asked these questions about, being asked to give permission to, where am I storing data, etc. Whereas, I just want the most convenient, frictionless experience possible until something goes wrong. So that's where you do need to look at the individual digital identity about, and being able to implement a solution and recognize the customer that's in front of you, whether it's sort of physically in front of you or virtually.
And Andy, just to add on that one, I mean, it's very interesting. I mean, if you look, for instance, to the US, where we still have fraud rates in the range of 4 to 6%, depending on you look at, I find that a fairly scary view. On the other hand, also have to say, I mean, if you listen to Apple Face ID, I mean, the fraud rate is less than 0.1%, because it's actually very, very difficult to fake. So I think the answer is probably somewhere in between. And I would say I don't think anyone here is going to say PSD2 or 3 whenever that comes up is going to be perfect. At least it provides some clarity and creates a fairly unique European ecosystem around the whole thing. So it's probably going to drive at least some adoption, and it's always going to be very difficult to strike a balance here.
It sounds like we're in agreement that regulation is not the way to push adoption, basically. Good. Awesome. A question from the audience. Khalid, I think for you, what percentage of reduction of false positives or manual review can a merchant achieve by switching from rule-based to a digital identity vendor?
So it's a really good question. I think digital identity by itself is not enough to replace your fraud system, but a digital identity with a service that actually gives you bottom line decision, approve, decline, or this is a bit risky, you better send it to 3DS. This is something that, like Forter is doing, it can replace completely the manual review process. Some merchant may still decide to do some sanity checks, to still check some things manually, but it's not really needed if you have a good system that you can trust. I mean, it's back all about trust. So if you have a good vendor and you trust their machine and data better than you trust a manual employee that makes decisions, and I think the world is going there, then you don't need to do any manual review. And when it comes to false declines, again, that will minimize your false declines almost to minimum. Like you can't expect any person, even if he reviews a transaction for half an hour, which they don't have time because your customers want to get their goods immediately, they can't in their head make all the right decisions. And as humans, we see something and we say, oh, I don't like it, like I'm scared of it, and then we block it.
I can provide a order of magnitude in terms of numbers on false positives. So I've actually worked in 2 different companies, one in the travel sector and one in the food and beverage, right? Both have completely different fraud rates. But then when we moved from the rule-based to a more like digital identity-based one, roughly on the fraud, on the travel company, right, we were of order of magnitude about 6 to 8% fraud decline rate. But when we moved to a identity-based, it almost went to about 3 to 4%. So that's roughly 50% reduction in false positives, right? That's a travel kind of order of magnitude number. For a business like HelloFresh, where we see very, very low payment fraud because I guess people don't want to sell our chicken and carrot or something like that. But I guess there we had a fraud decline rate of order of magnitude 1% there. And when we moved again, it goes towards 0.5%. So again, roughly 50% reduction in false positives. I think the second part is very interesting about manual reviews. I would take a hard view there to say don't do manual reviews at all, unless you're selling a Louis Vuitton Gucci bag for more than €1,000 where you really see value. Don't do manual reviews, do manual sampling. So take a sample of your transactions, try to find out what's the false positive and false negative. Don't do more than 100 a day. And it's more also not a decisioning, but more of refining the system, which helps better.
I think the point about being vertical specific is a really good one. Sometimes I think the best benefit you can have from working with somebody like Forter is the payments partnership, because if you're in a vertical where you've got 3 days to dispatch goods, you can afford to be a bit more cautious, take more time to review it. Other than the fact that the volume of transactions is going to be an awful lot to review. But I think that working with fraud specialists that can make recommendations based on what they've seen in your vertical is going to be really key.
Interesting.
I want to add to that also we need to take into consideration the risk appetite of the merchant. This is not something that we usually refer to merchants. It's more in the banking space. So when I talk to my merchants, I don't mentioned the risk appetite, but eventually it all depends on how much traffic they want to get inside. Do they want to get just everyone inside and then start to, monitor and see the behavior and then stop the risky transactions? Or do they want to be less risk-averse and stop as much as possible because they only want the ones that are safe? So this is a question of false positive. If we are stopping too much or we are letting too many transactions inside. So that's the basic risk management methodology eventually.
It seems that all these fraud tools, also digital identity, were trying to chase that point of no fraud. Is that possible, Andy, you think? Does a 100% risk-free world exist? Should it be? Should it exist?
Well, I mean, like I say, I've got almost 15 years in payments, and 10 years ago I was working at a PSP that had what was a very good fraud tool. And even then, they were quite, the guy that was heading up the fraud team, very confident that he could actually achieve 100% fraud-free. However, the number of good transactions that you're also going to decline meant that actually you're making what was a negative expected value return because you were losing too many transactions that were actually good. So I think, again, the move away from the rules-based decision-making to knowing who the person is, making the incremental scoring based on what essentially is 1,000 points of decision points is where the industry is currently going.
I would maybe just add, I would take a vertical specific view. So there are verticals, if you think about, again, healthcare, if you think about public education or even public sector as such, and I mean, in many respects, they are merchant who accept money. I think there are areas, then it's more painful. You're completely correct. The customer experience will not be number one. You may have to go several times through, but there are cases where we are effectively already at 100%. It's just incredibly painful to do so. I think we can get better to that one, but the moment you move away from that one, I would, again, particularly in the way we move a little bit away from e-commerce into mobile space, there are cases where we're close to. I just don't think they're applicable anywhere. But I think the underlying question should be, can we at least get into that direction and then balance it, make a conscious decision, as you said, from a merchant perspective?
I think if anyone asks me, can we do a business that is fraud-free? I tell them, yes, you can do it with business-free. You cannot really, process anything if you expect no transaction to be refunded, to be charged back, to be disputed in a way. So the risk management position is to handle the risk, not to stop or block the business. It's kind of a gatekeeper, but he needs to be reminded again and again that he's there only to keep the business going live. So today we have this amazing technology and a lot of data points and a lot of tools to actually manage properly the risk, even without realizing if this is the correct digital entity or not. But we can know if this transaction is safe. Is it a repeating customer? Is it a digital good that is not so costly to stop it or to let it pass through? So I'm not aspiring any time, anywhere for a fraud-free business.
Fair enough.
Yeah, I agree with Karen and with Andy here, and also I think it's super, super important, and we are seeing a lot of merchants missing it, is the customer experience. Because if you decide as a business to send all of your transaction to 3DS, yes, you will have, and assuming you also do some fraud, yes, you will have much less fraud, but what is the experience you gave your customers that every time they buy from you, they have to get annoyed by the 3DS window while they buy somewhere else, and hey, they get a great experience and they don't have to do it? How many transactions are you losing because you're doing it and people are either getting annoyed by you or they're just not managing to do it? And when we talk to merchants, a lot of time, for example, they're not looking at the 3DS abandonment. They are not thinking about it. So they say, here, I have my auth rate, 94%, my chargeback rate so low. Hey, I'm so great at what I'm doing. And I'm saying you're losing 20% of your business because you're sending them to 3DS. So is it really great? Or can you just look at auth rate and chargeback rate and say that you're great? Sometimes when we work with merchant and they reduce 100% 3DS to 15%, and we talk about, look how much more money you just did last month. And sometimes they look at me and they say, oh my God, 85% of my customers didn't have to see the window? And I'm like, yeah, that's what happened. And they like it more. I met one CFO that was more excited about 85% not seeing the window than about the 6 million euro that we showed ROI for the first month. I think it's so important to really measure the KPI. And even when you go and you choose a fraud vendor and a payment partner, look at all the funnel, look at like the experience, and look at how many people are trying to buy from you, how many are ending on the last, like at the end, they didn't fall on the fraud by a mistake, they didn't like fall when they didn't do the 3DS, and they didn't fall the authorization because you're asking the bank to do something they're not comfortable with. This is how you measure payment and you understand success.
Great. I think that answers this question from the audience. Why not just use SCA like 3DS? For example. What about those, another question from the audience, what about those consumers that hide their identity for privacy reasons? Is digital identity still relevant for fraud prevention in that case, or that then you lose that kind of tool?
So I think if you have a good digital identity vendor, nobody can hack it. I mean, they can hack my account on your website, log into my account, because it's very easy to find passwords today. It's very easy, unfortunately, to log into someone else's account if that's what you do for a living. The question then becomes, how do you understand the digital identity? And when we look at it, the question is, when you use AI and machine learning, the important is, what question do you ask? And the question to ask is this person right now interacting with you as part of the account of Galit? Does it look like what Galit looked like every time she's logging in and making transactions or interacting with you? Or someone logged into Galit account, but it doesn't look like Galit anymore, and this means that it's not me. So there is no hacking of digital identity. Someone can buy online my email address and my credit card and my name and a lot of detail about me. Someone can log into my account, but he will never really look like me when he's interacting. Like, maybe I'm right-handed and he's left-handed. I don't know, but he will never look like me. So you need to understand, how does it look? Does it look like me, to understand if it's me or not?
Is the other side then that for me as a consumer, digital identity privacy doesn't exist? Fortune will know stuff about me that maybe I even don't know about myself, about how I hold my phone, how I press my phone, how I behave. Is that right? Or is there a way to still keep that with myself?
No, I mean, there are ways to keep things for yourself. Like today, you can not share your, cookie and things like this. But
I think sometimes it's more into how you use the website or the service that you're trying to purchase. And this is something that you're unaware of. It's more into the, subconscious, because you are doing specific actions on the website or on the product or on the game itself, if we're talking about gaming, and then it's not something that you can do like when you're aware of that. So when the merchant check it, they can actually track everything that you do and make sure if this is your regular profile and activity and regular behavior, or is it similar to other users that came with honest, intention to purchase. Yeah. Or is there something, that seems odd in the way that you utilize the website, and then there's a red light, like about your activity.
Yeah, fair enough. There is so many fraud tools out there. Right? Digital identity is one. 3D Secure is one. There's many more out there. Kieran, how do you decide as a merchant, if you don't have all the money in the world to spend? How do you choose which tool to use for you?
Oh, that's a tricky one. And we keep getting these questions every day, like within calls. I like to offer the merchants to do some kind of an RFI when they try to choose a risk management tool or system. And initially, they need to see what they need from the marketing perspective, from the operational perspective, from the payment perspective, from the funnel itself until the payment page. And then once we realize what are the requirements of the business, business and the business requirements are very clear to the stakeholders of the business, it's not sometimes that easy for them to understand the needs, then we can go and look for, the relevant tool, because we need to take into account the payment methods themselves, the countries, the audience, the product itself, and how risky it is. So it's like any other, platform or tool that you need to purchase.
Rajat, do you agree? How do you look at that from a merchant point of view?
Yeah, I think like generally three things, right? So rule-based, 3DS, and then digital identity-based. So I think you need to make a digital identity-based fraud engine, whoever you work with, right? But that needs to detect most of what you call it like the true negatives, right? So basically whatever is fraud, so you detect it and then you filter it out. And then basically the rest, you send it for payments. I would say 3DS, it's a very bad idea to do blanket 3DS 100% for everybody. It's a very bad idea. There's a lot of data on this topic. UK has about 80% 3DS, and a lot of merchants are losing some conversions there. So don't do 100% 3DS. Do 3DS as a challenge mechanism from the issuing bank. So if the issuing banks is forcing you to do a 3DS on a particular transaction, then do it. And depending on the country, that percentage might vary, right? But I think really don't do blanket 3DS. Filter out true negatives using a digital identity. Try to avoid rule-based. Try to avoid manual reviews. And yeah, that's kind of a design of your system.
I will just add to what Rajat said about understanding that the fraud system is working with digital identity. The size of the network matters. So a question to ask is, how many of the identities do you know in whatever is interesting for you? The UK, for example. So if it's a vendor that tells you, we know 91% of the people making purchases in the UK, it matters. If they only know 10%, it means most of the people will come to your website, they don't know them. So this is one. The other thing that you can always do, it's a bit resources heavy, but you can do if you can do a POC, that will be the best for you to understand who is better performing. And the last thing that is easier to do is to ask for commitment. And when you ask for commitment, you say, this is you give your sample of your data and you say like, hi, Forter, what is your commitment? How many are you going to decline for me? How many will you say it's borderline? Maybe you want to send it to 3DS. What is the chargeback rate that you can commit? And if you get these commitments, and if the vendor is willing to actually pay you back when they are not meeting the commitment, it means that they are very sure about what they can do for you. While someone else that will just say, hey, we'll do coverage for you and we'll make sure you don't have fraud. Okay, but if they're not making any commitment, maybe they also stop 10% of your business to make sure that they don't have too many chargebacks to cover. So commitment is critical. Make sure you get a commitment and you get paid if your vendor is not meeting the commitment. This is the best way to know that your vendor is not over-promising you anything.
They're confident in their model, basically. Yeah. I saw a question from the audience come through. Is there a difference between rule-based approach and identity-based approach when a complex AI rules modeling is in place?
Tricky one. I think that the uses of AI is naturally very good in risk management because it gives us a lot of leverage to use the power of the machine to take decisions. But I think, as Galit mentioned before, we need to be very careful of what we're putting inside as parameters, what we're asking the AI to do, what are the results that we're trying to look for. And I think we're still learning the capabilities and the challenges that there is with the AI models. So use it carefully.
Yeah.
I can give an example. So if you look at someone's behavior and maybe a lot of things look very weird with how they behave, like the IP and what they are doing, and it looks really, really weird. But let's say someone just logged into, like they are saying it's me. Now you have to ask the model, is what they are doing match what we know that Galit is normally doing? So maybe it's not very normal, but you have seen it before with me. So if it's me again and I continue to do the same thing that I did before, so the question you ask, like AI is not different than anything else. You need to know what to ask, and the questions are very different. Do we know this persona? This persona is saying this is Karen. Is she behaving like now the question is she behaving like Karen? Is the question is not anymore, why is she doing it? Oh, we don't understand. No, the question is, does this really look, she's saying her name is Karen, does she really look like Karen? And I think this is the difference, and a rule system can't do it. Rule system, by the way, also look at a single transaction. So the rule system will say, here is a transaction, we send it to exemption, and it's declined, and the person comes again, oh, here is a transaction, we can send it to exemption. No, why? It just got declined 5 minutes ago. A rule system will never understand it just got declined 5 minutes ago, because it's a rule system.
Do you see still a lot of merchants who rely on the rule-based system?
Especially for, I would say, payment routing and 3DS routing, yes. Especially when all the time they will say, yeah, of course we route it to 3DS, but just because it was a higher amount. And that's a wrong answer, because if you trust the person, why? Who cares that it's a high amount?
Yeah,
I think
it's all back to trust.
The other question I would just also ask across everything. So a lot of stuff, I love what I'm hearing, but we should keep in mind that for 95% of the merchants, this is probably 3, if not 10 levels too big. So if you're a merchant on Shopify, if you're just an Amazon Marketplace, the reality, none of the stuff you just mentioned will mean anything to them. So, and I think there is also the other point in saying is, for those kind of environments, for better or for worse, it's still a rule-based environment. And how to address that question, they will always be dependent either on their acquirer, on their gateway provider, on their marketplace to actually solve that one. And I think one of the key questions, and also comparing, just looking at all the vendors out there who do smart POS and quite vertical solutions, are we actually as an industry manage to bring more of that, the potential of identity through those intermediaries out to the merchant? Because otherwise, if you're doing 10 million of revenues, you're not going to have a point of contact, and you probably don't even know half the stuff, and 3D Secure is just an evil word which people throw at you.
Yes, I think you're right, Andy. There's a lot of lack of knowledge for a lot of merchants. I think you were asking Galit at the beginning, why do merchants do not utilize all this beautiful, stuff? Sometimes they're just too naive. They're new to e-commerce. They have, let's say they just want to process transactions. They're not aware of the fraud or the chargebacks or 3DS. That's hard words for them. They just need a payment page and someone that is ready, to take credit cards. So they start like that. And then after 3 months, exactly, they start to get, disputes, and then they realize that there's something more than just processing payments. And then for them, everything that we discuss here is a very future view of everything that they do today. So I think for them, it's really important to give them systems that can decide on the fraud levels, decide on the rules, or anything that we can help them to prevent fraud prior to processing the transactions.
I think that actually really makes sense, right? I think most of the discussions also we are, I was also talking about, is also applies for merchants that have a payment and fraud team that's actually optimizing on payments and fraud. It's actually optimizing on conversions. If you look at the merchants on Shopify or something, they don't know anything about payments and fraud, and they actually don't want to know, right? That's even more important. And actually, for them, they want a solution like Shopify or whatever it is, right, to sell their T-shirts or shoes or bags or whatever it is, and they don't even want to know what is 3DS and SCA. So I think that's
yeah. They say I pay, 3 to 5%, discount fee, and I guess this covers it all. Usually it doesn't. But,
Awesome. Reinhard, you obviously come more from we're all in the market, but you come from a market perspective as a partner. What are kind of some of the emerging trends and innovations in digital identity and payments that you see that you're excited about, or maybe concerned about?
So, there's of course everything we just heard. Hugely excited about. I would again actually call out eIDAS. I think eIDAS can be a big driver of broader adoption. So if everyone is carrying around an identity method with them, that could help for a few things. Banking more broadly, but the specific adoption as well. I think the second one is just everything we've heard about more moving away from rule-based. That is very, very important. But then I think we're going to see many, and there was actually a question on this one just coming right now, specific application which just make people more comfortable. So a mobile driver's license is one which is technically not easy. If I've driven too fast, how do I take it away? Physically, I have to send it to Flensburg for the Germans in the room. In the mobile phone, it's not quite as easy. But we're going to see more and more of those cases emerging. And fundamentally, this is really the biggest point in the background. People are expecting less fraud. People are expecting more convenience, and this is going to drive everything. I think on average, regulation is actually going to help. There are going to be moments when we're all going to turn our eyes and this wasn't as intended, but on the other hand, it gives at least something of a level playing field. And last but not least, the technical costs in the background just cut down so much that a lot of the verification, even some of the hardware-based stuff, it just suddenly affordable for someone to actually put it into the background. So overall, all signs are on green. I think the question is how quickly will we get there?
Yeah, awesome. All right, great. Time is up. It's flown past. Thank you very much, all. Thank you all for being here, and thanks to the panel for their knowledge and insights.
Thanks for tuning in to the official MPE podcast. If you've enjoyed this episode, be sure to subscribe to the show and check other video interviews with other industry leaders on our YouTube channel. For more content, follow Merchant Payments Ecosystem on LinkedIn and Twitter. Don't miss out on our Positivity magazine, and remember to subscribe to the MPE newsletter at www.merchantpaymentsecosystem.com.